Good morning, ladies and gentlemen. Kevin Wurgler with eXp Realty, along with my co-host Mike Stensrud. Hi, Mike.
Hello, Kevin, and hello, Jim and Stacy. Thanks for joining us this
Hello.
Monday. Looking
Yep.
forward to this conversation. Hope you all had a great weekend, nice and cool. Fall is here in the Southwest.
Yes.
We're loving it.
Yes.
Hey, we're here today with the know-hows of real estate, and we're going to be talking about reverse mortgages. And today I have Jim and Stacy
Brebner.
Yay, Brebner! All right. I just wanted to make sure they we got that in there correctly. But they're with Fairway Independent Mortgage, and we're going to be talking a little bit about reverse mortgages. I know I work in 55 plus communities, and we've done a couple of them. But Jim and Stacy, if you could just introduce yourselves and tell us what you do.
Well, I'm Jim Brebner.
I'm Stacy. We're a married lending team, and we primarily focus on reverse mortgages. So, which is awesome because here in Arizona, that's a big deal. But we are licensed in Washington, Arizona, and Colorado.
Yep. And we have agent or loan officers all around the country licensed in all 50 states.
Great. So do you have, so you got a few people around there, so you can do loans in Washington and Arizona, correct?
And Colorado.
And Colorado. Awesome. So if we get this out there to a lot of people, we have some contacts around the states that can help.
Yep. And we'll find the right person if it's in a state that's not in one of those three.
Perfect. So give us a little background about what is a reverse mortgage.
Well, go ahead.
Well, I was going to say it's a great tool for really any senior, 62 and older, to be able to tap into their equity now without having a monthly mortgage payment. So a huge tool for seniors in retirement.
Yep. And it's the vast majority of the reverse mortgages they're FHA insured, and it's called the Home Equity Conversion Mortgage. So that the acronym for that is HECM, HECM, and you'll hear that often if you're talking to loan officers like us, just because we want to shorten that. But that's the product that's most often used.
Okay. So you mentioned FHA. Is there any limitations to FHA? I know I had a client that did a reverse mortgage and they were doing FHA. And out here in the Sun Cities, we have these apartment flat homes, and we also have twin homes and little casitas. And sometimes a lender, it comes up as a condo. We got into that little bit of a discussion with a lender that they were using at that time. And it created because in Sun City and Sun City West, they're called PUDs, not condos. Can you explain that a little bit?
Yeah, so it does have to be an FHA qualified home. So for any home, it could be like a safety issue or something that might have to be remedied before the loan closes. But as far as condos go, it has to be FHA certified condo. And one of the great things about FHA is we have an entire department that actually will go in and help the HOA actually become FHA certified, which is great for the HOA because it opens up more people to come in and purchase homes when people are selling later. So we can help them do that, no cost to the HOA, can do it relatively quickly and get that done anyway.
Awesome.
Yeah, but that's a great question because it does need to be an FHA qualified home. So, we'll have clients that maybe, are younger than 62. Or let's say a property that has a well, and on FHA, you can only have up to 4 people shared on that well. We had a client that 5, so they didn't qualify for that.
Okay.
So it is a good question.
Okay, perfect. Mike, what you got there, brother?
Well, I'm a simple guy, and I get confused a lot. So I want to go back and just on how does the actual reverse mortgage work, and like things like who's eligible, just some of the basics, because I think a lot of people hear different stories out there. So maybe you can set the story right, how these work, and maybe who's eligible.
Yeah. So FHA, the FHA HECM is for borrowers who are 62 years or older, but you can have a non-borrowing spouse. So Stacy and I are going to purchase with a HECM, and I turned 62. She is 54, and we can still purchase. She can still stay in the home as a non-borrowing spouse until she passes away. So there's a remedy for this. The case one person turns 62 first. The home has to be FHA certified. It has to be. Uh, and then the couple qualifies based on the age of the youngest borrower or the non-borrowing spouse, plus uh, the 10-year CMT index plus the margin. So that long-term interest rate plus the age creates a percentage of the home value that they're actually able to qualify for. So the younger you are, the less you qualify for, because if you never make payments and the interest does accrue, if you don't pay the interest, then it accrues and gets added on to the mortgage. And so the younger you are, the more equity you need to have to be able to last, because you could live there till you're 100. So and then the higher the interest rate, the less you qualify for, because it's just assumed that the interest will accrue at a faster rate. So that's basically how it works. There is
Gotcha.
a cap for FHA. It goes up to 1 million, just shy of 1,150,000 as far as the maximum claim amount.
So if I just moved into my home, let's say 2 years ago, I could still do it, but it wouldn't be as beneficial. I mean, if I don't have a whole bunch of equity in my home at this point.
So you have to have, based on your age and the interest rate, you have to have enough in equity. If you don't, you can bring in money from savings. People do
Gotcha.
that all the
Okay.
time, but you do have to have enough equity. If you're already in your home, so you did not purchase with one, you can do a refinance just like regular. So you can go
Yeah.
in, you refinance, you qualify for a certain amount. If you have a mortgage, the refinance would pay off the current mortgage, and whatever left would be a line of credit. If you didn't have a mortgage at all, you would qualify for a line of credit, which either you could allow to grow over time, and it's going to grow at the same rate as the underlying mortgage grows at. So let's say like 6 3/8 right now. So that every year that line of credit will get larger and larger, or you can actually pull money out at that time. We have a client now who's going to actually take a tenured payment. So based on they'll get a little over $1,000 a month. It's based on the FHA tables for the life of anyone who lives in that home. So there's a number of different ways to pull money out. Or if you don't pull money out, you just leave that line of credit grow for access when you do need it.
Gotcha. Okay.
Okay.
Thank you. Kevin?
So if I've got if I have a client and they were asking for they wanted to sell their house and then they were going to buy another one. But this was back in when the market was, it was good to sell, but when they had to go back out and buy again, they were well over. So we actually not talked them out of it, but we sat down with them and just said, you should stay in your home because you're going to have more expenses and stuff like that. They were actually just trying to look for money. And so we eventually reached out to some reverse mortgage people, and they actually got to stay in their house and then got the reverse mortgage on it. So how does that work? So when are they going to have to make payments, or are they going to make payments because they wanted to pull it out to do some traveling, that medical bills and different things like that. So does that all work good for them to do that?
Yeah. So one of the key benefits for the home equity conversion mortgage is no payments are mandatory. There are great reasons to make payments. We encourage people to come to our class because there's a lot more than we can do in this this short podcast, but one of the best things is they don't have to make a payment if they don't want to. And so they can actually go in, and that case is a refinance. They can refinance their home, pull a little money out, go ahead and do whatever they want with that. So and so going on a vacation, doing, actually, a lot of people are saving so they can actually pass on money to their heirs. Well, they can actually pass that money on early. They can actually give with a warm hand, not a cold hand, and actually see the pleasure that they give their heirs because they're alive and actually watching it. So they might help a grandkid buy a car, or help them go to school, or just so many things they can do that way. And then of course there's the necessities, the emergencies. You have healthcare issues that come up, a roof that suddenly needs to be replaced, big expenses. They can just access equity in their home and be able to make those payments and not stress about it, not go into more debt and so forth. Yeah. It's a great product.
Yeah. And the cash flow is everything in retirement. So not having to make a payment is a big deal. That's a big deal for seniors.
Yeah.
Yeah. So what happens then if they have the reverse mortgage, and then unfortunately they pass away, and the kids now are the executors of the estate? Do they have to pay back the reverse mortgage, or how's that all work?
Yeah, I mean, it's just like a standard forward mortgage. They're going to go and sell the home. They're going to pay off the existing mortgage, and then they're going to have, costs to selling the home. And so whatever net proceeds are left, they get to take.
Yep.
So it's a very easy process. People tend to overcomplicate it just because they don't know, but it's the same.
Yeah.
It's the same.
And one thing I'll add to that is that one of the other best benefits of this product is that it's a non-recourse loan. Well, what does non-recourse mean? That means that if, let's say, home prices were to fall, or if this couple lives in the home for a long, long time, they're got the genes that allow them to live to in their late 90s or hundreds, they could actually accrue enough interest that the mortgage might be higher than the value of the home, especially if home prices went down. Well, in that case, the home is responsible to pay back the mortgage, not the people or the heirs. So whatever the home sold for would pay part of the mortgage, and everything left is paid for by FHA and from their FHA insurance fund.
Oh.
Wow.
Yep.
How about the time that they have to sell that home? Because that's always it's just a very, very stressful time. So how long do they have to sell the home once they take it over?
Super great question. They have if they have a regular mortgage, that mortgage has to continue to be paid until the home is sold and the mortgage is paid off, right? Well, with the FHA home equity conversion mortgage, no payments are due, and the servicer will give up to 6 months to sell the home, and they'll give 2 3-month extensions. So, and with nothing more than, hey, we're having trouble selling the home, and they can get these extensions, so they can go up to a year.
Wow.
Never having to make a mortgage payment, be able to actually pay back that mortgage, which is super cool.
Yeah, it's really super cool because they have time to grieve, right? And they're not it's not chaos like it would be on a standard mortgage. They have that up to, like you said, a year to figure that out. So it's a good amount of time.
Well, we see that a lot here in Arizona. Mom and dad live here. They pass. The kids are in Minnesota, whatever, right? So it's just it's a big benefit to have that. Not be, I got to sell the house in 6 weeks or whatever. So we talked a little bit about this before, but there are other types, and I'm not sure, maybe you can help me out, but there's more than the HECM. What other types of reverse mortgages are out there?
Yeah, great question. So I was looking for the number, but somewhere over 95% of all of the reverses done are the home equity conversion mortgage. But there is proprietary mortgages that are offered by independent lenders, And the biggest reason for going, there's two big reasons for going with those. And one is it goes down to age 55. So you can actually go into the product for at a younger age, and they'll go up to 3 million. So you, where the limit on the home equity conversion mortgage is 1,150,000. So you can actually go to a higher value on the home. Now, the reason that we almost always go with the HECM is because the terms, the line of credit feature,
Yeah.
all those things are so vastly superior that that's normally the product that we go with first. But in certain cases, like for example, what Stacy talked about, there was 5 people on a well, they couldn't do the HECM. They were aced out of that because it couldn't become FHA certified. So they had to go ahead and use a proprietary version.
Gotcha. Great.
I think a lot of people probably don't really understand that kind of thing. And again, your class that you teach, when do you teach, and when do you have these classes?
Well, we do it monthly here at the Grand. So, we're trying to figure out like what's the best day. Right now we usually have it midweek, but we are going to try a Saturday, but we try to do it once a month.
Yeah.
Excellent.
And then we'll do the presentations via Zoom. We'll do them one-on-one, but sometimes people just want to kind of be in a class environment where they don't feel like they're being, sold to. They're just learning, and so that's why we do those classes. And we offer to do them more, but we do them at least once a month here in the Grand.
And
That's
I will
great.
add, there's the great thing about the home equity conversion mortgage is HUD has put in a ton of safety features. And part of that is Jim and I making sure, right, that the consumers understand the product. So we feel it's very necessary for us to not only do these classes, but to have the one-on-ones to make sure they fully understand. I can't tell you how many times we hear from people, realtors, specifically, that are like, yeah, I have a client and the kids have no idea what is going on. Like even the consumer, got into it years ago, still doesn't understand, all of the different things of a reverse mortgage. So it's important for us, but it's also a safety feature that HUD's put in place.
And just clarification, are those classes for consumers or for professionals, agents and other affiliates, or do you do them both?
Both.
Okay.
Both. We almost always have a financial advisor or a real estate agent. Sometimes we'll have title people in there. So yeah, it's really, we're kind of I call myself the HECM evangelist because we're out there. We want to really teach people. One of the slides we do is like, what color is the yield sign? And everyone always says yellow. And
It's
the
yellow.
yield sign is red. And it's been red since 1977. So we say that so that just to get people to recognize that maybe how they see the reverse mortgage is totally wrong. And it usually is. And so we want to educate them how it really is.
It's kind of like the bank owns your house and that's it. There's just certain things that go with, right?
Yeah, we
and
still hear that.
Yeah. Yeah. And that just
Yeah.
sticks, like the yellow sign, I guess.
Mm-hmm.
Yeah, it sticks. Yep, that's right.
So these have kind of been all the good things about reverse mortgages. Are there any downfalls on a reverse mortgage? Now it has to be on your primary residence, right? You can't have like I own this home, and if I wanted to buy a home in Sun City West, I couldn't get a reverse mortgage on it because this is my primary home. Correct?
That's
So
correct.
is there some disadvantages to it as well?
I think what we usually tell people is it needs to be a home that you're going to be in for a while. So we kind of just put the divider mark at 3 or 4 years. And the reason is because the upfront costs are basically paid for by the loan, but the benefits you receive come to you over time. So if you were to purchase with one and then sell a year later, you wouldn't have had enough time to accrue those benefits to make it worth the cost you paid. So the big thing is it should be a home that you see yourself in being in at least 4 or more years. Um, Other than that, and this might sound crazy, but I just think it's a great loan. We can show you how it can be used. It's not just a loan of last resort, but how it can be used to actually help you leave more, have more for your heirs.
Mhm.
Can actually help you leave a larger legacy for your heirs. To actually make your investment portfolio last longer. Actually, we can show you how to pay less in taxes. There's so many great things that can come out of this loan that we honestly think it can be for everyone, except for people who aren't going to be in their home very long.
Yeah, and that's probably the biggest one because we sell a lot of real estate, and it seems like people change homes. Every couple of years, it seems like we just got a call the other day from somebody that got a nice, beautiful home when they bought it, but now they saw another one and they want to go into that. So
Yes.
Yeah,
Yeah.
yeah. So
obviously, they're shooting themselves in the foot for that if they want to try to get into a reverse mortgage.
well, they are, but I mean, they are even with real estate. I mean, every time they buy and sell a home, they got the selling costs of selling that home,
Right.
and even the buying cost of buying the home. So, yeah, it doesn't make a lot of sense to keep buying and selling, and it would be the same thing with the home equity conversion mortgage. There's just a cost that you're going to occur again. Um, now. Now we do a HECM refinance of a HECM, and the costs are going to be less on that because you don't pay the upfront mortgage insurance premium a second time. Once it's paid for on that home, it's paid for. Now, if the
Hmm.
home's gone up in value by 100,000, you would pay it for the difference, but not on for that original amount.
Yeah. So if you're going into just buying a home, just you found one, you want to buy it. Is there like on a normal loan, you got maybe 80/20, or you put 50% down or 30% down or whatever? Is there a percentage you have to put down with a? Is it like the same thing, or is it a little bit different with a reverse
Yeah,
mortgage?
great question. So it's going to
Yeah.
change based on whatever the interest rates are at the time. But let's say about 34%. If you're 62, you're going to have to bring in, you're going to qualify for about 34% of the value of the home. And so that means you have to bring in the rest. If you're 72, it's going to be somewhere in the 40s, like 42, and you're going to have to bring in the rest, or maybe it was 44, I can't remember. But and then at 82, it's about 50-50. So you'd have to bring in about 50%. And
Hmm.
92, it goes into the 60s somewhere. So, yeah, so you're going to have to, it's going to be based on what the interest rates, long-term interest rates are at that time. And those age ranges are how much you'd have to, you'd qualify for. And you bring in the rest.
Okay, good.
It seems like from a wealth management perspective, and those people, and I'm not an expert in that area, but as you retire, you're looking for different sources of income and flows of income, right? So I'm just curious if these wealth management counselors or managers around are taking reverse mortgages into account as another piece of your portfolio.
Yeah, so
Yeah.
we're starting to see wide adoption of the from financial advisors,
Yeah.
and if we can get them to one of our classes, it's 100%. They find the light bulb goes on, and they realize,
Yeah.
it's actually a lot of the financial advisors have a fiduciary responsibility, which means they have to treat that person's financial plan like it was their own, and to
Mm-hmm.
ignore what is often the largest asset in their entire
Right.
portfolio, their home equity, is actually, it's being negligent on their financial plan. You should at least look at it, see what it would do to add it. We can show these great examples of how it can actually help them make their investment portfolio last longer, and so they should at least take a look at that asset since it's often the largest.
Yeah, makes sense.
Maybe one of the other things, can they be foreclosed on and stuff like that too? Is like a regular loan?
Yeah. So
Yeah, that's a good question.
yeah. So why don't you say?
Well, yeah, just like if they own the home free and clear, they're going to have to pay their property taxes, their insurance, HOA dues, any maintenance of the home. It's the same. It's the same exact thing. As long as they're, keeping up with those things, they should be fine. But if they let those go and aren't making those payments, like they own it outright, they can go into foreclosure.
Yeah.
Oh.
Yeah. Yeah, so but we now, one of the safety features is we do a financial assessment. So we've had to say no to someone before that didn't have the income. Now they had to have pretty low income, because I'll tell you, almost everybody qualifies, but they didn't have income enough to satisfy being able to pay property taxes, homeowners insurance, HOA, and utilities and food. That it's a residual income like you would do with a VA loan, and they didn't have it, so we weren't able to do the loan for them, because we're not going to put someone in a loan that's has a high chance of foreclosure. And that's a recent change by HUD and FHA, and it's a great one because we're going to see much less foreclosures in the future.
Cool.
Mm-hmm. Yeah,
That's great.
Excellent.
Yeah.
Well, I think there's so much you could do a class on this. What an idea, right?
Hey, good
Pretty
idea.
hard to do.
Oh,
It's hard to do this in 20, 25 minutes, but yeah, this is awesome. Anything else, and just to close in, you'd want to share with buyers and sellers out there looking at reverse mortgages?
Sure. Yeah, I think the home equity conversion mortgage is such a great product. Like Jim was saying, we're really trying to get the word out. And honestly, one of the biggest responses is, why isn't everybody talking about this? Why don't we know this? How come, there's not more people out there doing them? And so we just feel this urgency. Yeah, we got to get the word out, because there are a lot of seniors that need it. But when they hear the product, they'll realize, no, I want it. There's so much benefits, so many benefits to this product that they just walk away wowed. They really do.
Yeah. So how's the best way, if you want to? How do we get in contact with you guys? How do they call you to get you information from you guys?
Well, they can go to our website, which is brebnerteam.com, B as in boy, R-E, B as in boy, N-E-R, team.com, or just call us at 253-576-7968.
Well, we appreciate you guys very much, and this has been very educational for me. I mean, that's you hear about it, and you just want to offer and tell your clients, give them some suggestions and have them figure it out. But we really appreciate you guys doing this for us.
Yeah.
Absolutely.
Keep preaching. Keep preaching.
Yeah.
Preaching.
Yes.
We're doing the evangelization.
That's good. Don't ever stop.
Yeah.
All right.
Okay. Thanks a lot, guys. Appreciate your time.
Appreciate
Have a
it.
great one.
All right.
Goodbye.
Take care.